Good morning, everyone, and welcome to the day 3 of the open house. Can I please have a quick sound check? Just want to make sure that you guys can see the screen and also hear my voice. Good morning, everybody, and welcome to the Trade Out Loud Futures Trading Room. My name is Anka Metcalf. Today's the last day for the open house, and it is December 11, 2025. It is 9:05 a.m. Eastern. We did have some technical difficulties with the Zoom room and with the camera, with everything, every single soft that connects to the Zoom room. And that is because yesterday we had some people in here that were using some sort of AI type of recorder. So our team is working on that to make, we try to make Zoom room work right now, but I'm not going to be on the camera because we cannot connect it to the camera anymore on this computer. So we're going to get started, everybody. So as you guys know, there are some rules to the trading room. So in the first hour, we don't take any questions, but all your questions will be answered right after we're done with trading. So the floor is open. You ask, I'm going to answer every single question in here. Now, account size and participation, no matter your account size, you can participate in any setup, but simply position size scale to your size. So what that means is that you decide what your percentage risk per trade is. And we had a lecture yesterday about position sizing and how you need to calculate to fit all the contracts into your size, whether it is a full size or a micro. Once again, we as traders do not decide, and I don't get out of bed every morning and say, oh, today, you know what, I'm going to trade micros. And then tomorrow I'm going to wake up and say, no, you know what, today I'm going to trade full size. See, the good thing about trading is that we don't get to decide anything and the market decides for us. So with that being said, even if you have a smaller account size and you say, okay, I'm going to trade micros. No, you're not, because you could have a small stop, for example, in an index like the Dow, and you can participate with a full size. Okay. So if this is your first day in the room, watch the flow, study how, we select the trades, how we manage, how we execute before you jump in. Position sizing, once again, is very important, and managing the trade is as well very important. The trade format, I'm pretty sure that you guys are familiar with it by now. We are going to put it out there on the mic. So you're going to hear me nonstop on the mic. Not really nonstop, but when I have a reason to talk, right? So you're going to hear me on the mic, analyze the trade. Okay. So I'm not just going to say, okay, here we go. We're going to jump into YM at this price. So we do a thorough analysis, and this is what the pre-market game plan is for. So please watch the recordings. So we are going to do the pre-market game plan. We are going to look at the major support levels, major resistance levels. We're going to look at areas of confluence. And right after that, we are going to look at the market. And I am going to walk you through what I see in the market, volume-wise, momentum-wise, price action-wise, okay? And then when we funnel our attention to one trade, is going to be because we see more velocity or we see something specific to that trade. And then I am going to say it out loud on the mic. Okay, I'm going to be watching only, for example, NASDAQ, and these are the parameters that I'm going to look for. So I'm gonna tell you about the entry that I'm looking for. I'm also going to show you on the chart what I'm looking for. And then I'm going to show you where I place my stop. So I'm going to put my cursor where I place my stop. And then I'm going to show you where I get the targets from. Okay. And actually the targets are discussed for every single index in the next few minutes in the pre-market game plan when we analyze everything. And then more so, I'm taking my time to type in all the trades. So for example, if we have a trade in NASDAQ, you're going to see me NQ, post NQ. then the direction of the trade, whether it's going to be long or short, L or S, and you're going to see the entry price followed by the stop price. And then you're going to see the targets, whether it's one target or a whole bunch of targets. And obviously with me, you're going to see a whole bunch of targets. All right. So if you're trading micros, if your position size requires to trade micros, then you will be adding a few points above the entry of the full size contract that I call live on the mic and post in the trading room. And you're going to be adding some wiggle room because the micros contracts are 10 times more fleecier, more flakier, more volatile than the full size contracts. And you could get a trigger immediately on the micro contract and still not trigger the full size contract. We go buy the full size contract because the majority of algos out there go buy the full size contract, okay? So what to expect in the next few minutes, we will be performing the pre-market game plan for the major indices, some commodities that we have on watch. Yes, we looked for the volatility index here and there, and especially that yesterday, pretty much the dust has settled because we had the FOMC rate cut. Then we're going to look at, and in fact, in just a few moments, we are going to look at the news that are likely to impact the market for the trading session today. We will be looking at the earnings impact, and that is what we are expected for the trading session today. But also we will look at the forecast for tomorrow because tomorrow morning is going to be a very important day for the market because of some earnings that are happening tonight. And then we're going to go ahead and look at the charts. You guys are used to the panel. We are watching 6 charts. I have 6 charts displayed. The reason for that is because we want to see what's happening in the commodities world as well. And then we're going just to dive into our Zen watch for some trades, for the day, for today. Today being Thursday, we had this morning earnings from Sienna, Lovesac, Vera Bradley. Again, these are not high impact earnings. However, we did have 2 companies that reported last night that created some problems, especially for NASDAQ. We had Oracle and Adobe. We will be discussing those stocks in a second and the implications of their earnings into the current price action activity in NASDAQ. And more so, tomorrow, you guys are not going to be here, but my team and I are going to be here, and we're going to be trading the effects of Broadcom. This is going to be big time. So this is going to be on Friday. Also, we have Costco and Lululemon. These are also very important. Costco has been on a free fall. So all the investors want to see if it's going to be one of those buy the bottoms in Costco, or if investors are ditching it slowly right now into the end of the year as part of the window dressing effect, and then picking it up as part of the January effect. All right. So with that being said, we don't have a lot of data throughout the day today. This morning, we just had the unemployment claims, and we have a bunch of data that is coming out that is non-impact for the market. Today, I will also share with you some facts on how you can become a professional trader and what it takes and how we can help you. So we're going to walk you through the methodology. We're going to walk you through what we can offer to help you in your trading and with your trading, to take you from where you are right now to where the members in our trading room, where the members in our courses are right now. So let's start trading, everybody. I will be sharing a brand new screen right now, and we are going to look at the overall market to see whether the market is up or down. And we're trying to gauge right now the momentum. So we're going to try to gauge relative strength, weakness, or something that is striking for us before the market opens in about 15 minutes. So we're seeing right off the bat that there is some divergency between the Dow and NASDAQ, in the sense that NASDAQ is down 0.5% and the Dow is up just barely. So it's just into the unchanged territory. So we also have the mini S&P a little bit down in sync with NASDAQ. And we also have RTY in sync with NASDAQ and the mini S&P. As you can see, the commodities are higher today, and we are in swing trades that have been initiated quite a while ago for copper and in gold just last week. But the gold chart looks very good, very steady. It's up already $32.40. And we are up almost 2% up in copper with a beautiful rotation off of the 10 EMA and off of the minor support zone. So gorgeous setup. If it trades over 550, we will be reducing the stop to 530, which would put us in the money. And then we have a free trade on our hands. So this is perfect for us. All right, so this is the overview. So we're noticing a little bit of divergence here and there. The reason for that is because we had Oracle and Adobe report earnings that we will be revisiting right away. So first off, we're going to start with Adobe. Adobe reported, like I said, earnings last night. It's still, very much sideways. It's still contained within this range, but I think it looks very explosive if it starts trading above this prior high. And Oracle is the big problem because Oracle had some pretty bad earnings, had a pretty bad earnings reported. It's already trading under $200, almost $10 under the 200. It's still settling into the support, but for how long? Because if you could see where it's trading right now, it's trading very close to the support level right here. But investors were wishing to take the price a little bit higher into earnings, which did not happen. So Oracle is going to be one of these stocks that is not going to get picked up, probably just like Costco into the end of the year. And because we're talking about Costco, all right, here is Costco. Like I said, I don't know if this is still a phenomenon. We're going to see it tomorrow. I don't know if this is a phenomenon where the window dressing effect has started to kick in and the big investors are selling it, obviously for tax purposes and also to dress up their portfolio because they do not want to share the information with their members, with their clients, because there are other stocks that have been performing really well throughout the year. Let's say you had Google or you had Micron or AMD or Walmart or what have you, or Goldman Sachs, and you find out that you're in a losing stock like Costco. So that's not too good. So what they do is they sell it and they jump in stocks like, for example, Goldman Sachs, that is already high. So they had no idea, the clients have no idea that they were in Costco, that they lost money and now they are into Goldman Sachs. So it's something that is happening into the hedge fund world, into the institutional world, etc. So these are the major things that I'm watching for the market right now. Obviously, I'm watching all the NASDAQ stocks, the performers, the Max 7. I am watching, obviously, financials. I'm watching the energy sector just to get a feel of what we will be trading today. Because wasn't it fun yesterday when we picked the Dow? Do you think that we picked the Dow out of the blue just because we decided, we woke up in the morning and it said, oh, we're going to be trading the Dow today and we're going to go full size on it? No, it was full blown analysis and it's not very complicated, but you need to have the system for it. So we're going to begin our analysis right now with the market. We have 10 minutes into the open and we're seeing that the Dow is definitely relatively stronger than the broader market and the broader indices. And we are just into this mega resistance here, and the resistance came from August. So we still have super duper resistance into the 48,300 zone. What we do like a lot is the fact that we had a slingshot lower here onto the daily. You could see it right here. faking everybody, because all the novice traders or all the newbies out there, they think like, oh my God, it violated below yesterday's low. This is so bearish. Oh my God, it's under the 10 EMA. But the reality is, watch the structure, because you're going to see this very often happen, and especially into the FOMC day. Now that we're clear above the FOMC, we are testing the prior high from yesterday. And once we get above yesterday's high, which is into the 48,245, that will represent the velocity zone. The velocity zone will push the price immediately into the 528. So this will create traction not only for investors, for swing traders, for funds, for hedge funds, for institutional traders, what have you. That will create the momentum that day traders are going to speculate on to the long side. We do have support into the 47, just below 47,500. And that represents another higher low to the structure. So the bullish bias is absolutely intact. We have the low, we have higher low, we have higher low here, higher low, and a higher low. So if we start exploding above yesterday's high, the next target is going to be into the 500. This is the down. Now, mini S&P, very much same structure, very much alike. We have a strong base with a higher low. We have a double bottom formation with a higher low on the daily chart. And we have an area of velocity over 6,800. This area has been tested and retested quite a few times throughout the last 2 months. However, if we start closing or testing just above 6,900, we are going to start moving into the prior high. This is the all-time high that was set on 1030. So we are looking for a continuation into the 6,950. Look at these bottoming tails. They're just showing out that there is a lot of buying pressure coming in. So if you're looking to see if the price is trading below the 10 EMA and you're freaking out because it's short, it's not a short. News flash, it's not a short. So it is the context that matters in here. And because of the velocity and the low volume that we're having into the market, this is what creates that slingshot effect. So over 6,900, this is very bullish again for continuation higher into the 6,950. So we are going to have additional smaller targets for intraday, but that is the ballpark target that we're looking at. And then we have NASDAQ, which is in sync, exactly same pattern with the mini S&P. We have a double bottom effect. We have the slingshot again. A lot of traders got slaughtered here with this tail to the downside, and then quickly rotated off of the 200 SMA. Surprise, surprise. We were just talking about this in day one about the power of the 200 SMA. And right now the price action is still trading within the range. So it's still going to be pretty difficult to assess a correct trade entry, not a direction, because we know it's going to be bullish, but a correct entry. And again, we have to see what's going to happen with Oracle and everything else that could potentially, in sympathy, could perhaps move a little bit lower. One thing that I do like about this pattern is the setup that is happening here. So this is what I'm going to be watching. If the price action is going to get over 700, place an alert on your platforms, because this could potentially represent a trigger point. It doesn't represent a buy just yet, or you can decide for the buy. So you can put a limit order here if you want. I'm not going to do that, but I'm telling you what you can do in these types of situations. So you could put a buy limit order here, and over 700, it would be like 705. And place the stop below the 21 SMA here and below the bear candle into, because this, when this price action is going to achieve this high and take out the high, this will create a new support zone, especially that is on the 1H chart. All right, so let's move to RTY. We're roughly 5 minutes to the open. And RTY was the strongest. Usually small caps perform better than anything else into the end of the year. It's their seasonality, their peak seasonality is right now, and they perform good until like about January 15th. And this also coincides with the beginning of the new earnings season. So we had a beautiful breakout, super sexy breakout here in a Russell with a continuation higher, 2581 for the high. And as you can see, we have, ladies and gentlemen, an official all-time high for Russell. This is very impressive because usually Russell is the one index that underperforms the major indices. But really nice progression. We have support zone into the 2540, and here we have a potential sandwich as well over 69 or 70. I'm gonna place Myla right here. That's gonna help me. I suggest you do the same on your platform if you want to help yourself. Read the charts and kind of like draw your attention to what's moving into the market, because this is very bullish. So this is going to be a sandwich over 70 to 75 area, and has the potential to start rallying higher. And if you're asking, it's like, okay, where's this gonna go? Where's this baby gonna go? You have to look at the macro levels in order to see where it has the potential. So into the end of the year and going into next year, going into January, the potential is 2730. So this is the new target for it. All right, so this is it for the indices. Now let's take a quick look at commodities. Commodities are and we're going to start with gold. Commodities are a little stronger here. We're still waiting for the breakout over 4,300, and if we get the breakout over 4,300, we start moving higher towards 44. Yesterday I showed you the targets beyond the all-time high, so we're going to stick with those. Then we have oil, which again, I'm going to bring it up, but it's still very choppy. Again, to me, it's more of a political type of commodity right now, totally garbagey, non-tradable. But it is lower and it is testing support right here. That's all I can say. And it has a prior support. So from the technical standpoint, it's super bearish at this point. In fact, it is testing the support zone here that is massive around the $55. So let's say between 55 and 57, that's the support zone. But if it starts breaking the $55, it's going south fast. It's going like elevator down. And then we have, let's talk about silver here, because silver is very bullish with a brand new high. We discussed silver yesterday with the new projections. You guys can see it here. 67 bucks is where silver wants to go. Again, very bullish, very, very strong in the stock swing trader program. We are in silver, we are in gold. But in these futures trading room, we are only in swing gold. That's it. So with that being said, let's take a look at copper, because this is another swing trade that we're in and we're loving it, because this is going to contribute to even a bigger win for the month. I believe it was when we initiated the trade, October. So in October, we already had a really phenomenal month, but this is going to contribute. It's going to put some it's going to put some other massive gains into our portfolio when we close the trade. Obviously, it's going to be, I don't know if it's going to be closed in December, because we're in a full trailing mode. Being a swing trade, and especially commodities take a little bit longer time than stocks. So if stocks take from 2 days to about 2 weeks, commodities take a little bit longer. They can take from, let's say, 2 weeks to about a couple of months. All right, so no changes in here. Like I said, if it takes out the 550 area, I'm going to be looking to see if we can bring the stop up a little bit, and the stop would be $5.30 in here. So our initial entry is $5.18. This is a very, very heavy commodity. If you have not swung trade any kind of futures, I recommend do it in paper account, do it in a sim account, just to get used to it, because they are a little bit heavy, and you're going to see like a big pop in your PNL or a big drop in your PNL. So make sure that your position size, same thing applies. So that 1%. Last thing on our agenda before we have 30 seconds left and we're right on time. We're going to go exactly to the VIX, VIX. All right, so the VIX in here, and I promised you yesterday, I'm going to show you a chart that you're going to understand much better than anything that you see here because it's already marked with support, resistance, and the key focal areas that you need to watch. We're trading inside day, so this could be significantly okay for the market if we start breaking below $15.50. In fact, we're going to put on a quick alert here. Never mind. We are going to see a massive pop into the market, and this is what we want to see. So mark your charts for $15.50. All right. So now we're gonna shift to our trading screen because we're gonna start stocking for some trades in here. All right. So now it's Zen time, not the fun time. Now we just sit and watch and fun, fun, fun. Russell, not bad. Okay, here's the chart of the VIX. Why I'm already strong momentum in the first minute. Very thin market, and the thin market, keep in mind, we are trading right before the contract roll. So the market is going to be thin. There is just very little volume dripping right now into the forward contract, into the March contract. So this is the reason why the price action is going to be a little bit more flakier, thinner. This is just the initial open. Bitcoin is down as well. Out of the indices, we're seeing that we have green in the Dow and RTY. RTY already triggered a little bit above that red candle. Just monitoring the activity here to see how it trades. This trade setup is going to be based on the hourly. The 5-minute is not really that conducive. The stop is not as wide. You can position size beautifully for about 12-point stop or so. The dollar is down. Okay, this is the SPX. So you can see how strong it is. Kind of like Russell here. I like the bottoming tail on the daily. It already printed 69.4, so I will be looking for some kind of a breakout. I'm not sure if I have to go by the ultimate high here over 71. And I think that's what we need to do. So RTY long 25.71. And we're going to place the stop just below this newly formed pivot once we take this out. So the stop is going to be 55. So that's gonna be 25.55. We're gonna try to shoot for a first target into the prior high here, into the 81. And the next target, we're gonna go right into this pivot point. Just gonna, let's do 25.90. Like Saul mentioned here in the room, we have heavy divergence into the market. Pay attention to where the support areas are into NASDAQ, because NASDAQ is a little bit flakier. And the reason for that is Oracle, right? It's Oracle. The big problem, because it's reacting off of the earnings. The earnings are very, very recent. The S&P is trying to hold a little bit better. We're gonna look at the panel and see what's rocking and what's lagging into NASDAQ currently. We have Moderna, Airbnb, we have Adobe riding higher. Adobe reported earnings last night as well. And as far as losers today, we have Rivian, PDD, SNPS, AMD, NVIDIA down almost 2.7%, Broadcom down 2.6%, Intel down 2.5%, AMAT, but this is just the first 4 minutes into the market. Okay, we have an order fill in RTY at 71. No entries for the Dow. The Dow just took off. NASDAQ is going to be a little bit problematic today for a setup. It's trading right now under a lot of resistance, and so it has a lot of overhead resistance right now. Bonds are moving higher. I know we haven't talked about bonds. I only trade bonds from the swing trading standpoint. All right, so we're looking for a first target of 81 in RTY. And so far we're looking good. I'm interested right now in ES. ES has a really nice compression. And we could go by this 5-minute high low. The range is about 10 points with wiggle room is going to be around 12 or something along those lines. All right, so we're going to do ES long as well. ES long is going to be 71.5 or 72, and the stop is going to be 60. We are going to shoot for a first target of 76. The second target is going to be, I'm going to show you in a second where we're getting that. It's going to be 80, 83, maybe 85. So we're going to start with this. And then if the market strengthens and starts moving higher, we will be looking at further targets that could take the price into the 69.00. Okay. Dow right up the gates, very, very strong. Oh, thanks so much, Jill. I appreciate it. All right, we got an order fill into the M&E S&P as well. Absolutely not, Steve. No, no March contracts. if you look at the volume to see where they're at, you will see that the March contracts do not have any volume in them, so there's no roll. And as a rule of thumb, the roll of the contracts, if you don't know where to look and what to do, the roll of the contracts is usually the week right now, the quadruple witch option expiration week. Always. Of course. We're in a limbo here with the S, no pullback in the Dow. I'm looking at the time, it's 9:45. It's 9:40, so I'm looking for the 9:45 timing. That is a reactionary time in the market as well. All right, so the first targets that we established for the mini S&P are 68.76. The reason for this is because this is the prior high from the open. Okay, so we're gonna go with the first target here into the prior high. This represents resistance. The second target, we're gonna go into the 80 area, so just above this pivot right here. Okay, and then if you look on the hourly, you will see that we have basically room towards 6,900. So we have some small targets that are coming only from newer trading. Oops, sorry. Only from newer trading session charts. And those are little mini targets from yesterday's trading session that are they're progressed here, and especially into the overnight as well, but they're mostly here into that chop, the FOMC chop. And those are the 83.85, but they don't represent a whole lot of issue for it. But the big thing here for price is to get over 77. And if we get over 77, you could see the same sandwich formation on the 1H, then we are going to start moving higher. So it's basically that 76 first target level that is going to be the resistance, because we have resistance here. We have also a pivot point. There's some resistance in here as well. So if the price action throughout the day today is going to take this out, we're golden. We're riding towards 6,900. So we should have clear tradable void. You can see that we don't have, a whole bunch of pivots that are above the 80, right? So we have the 83.85. These are minor coming from the chop from the FOMC. However, if we start managing to break, and that was history because that was yesterday, we established new plan and new parameters for the overnight. So therefore, this is a sandwich formation. Love the sandwiches here. All right, we are in the Dow swing trade as well. Remember, we used soft stop because of the FOMC. Our original entry for the Dow is 48,160. Currently trading at 48,454. So we're up roughly about 300 points into it. And we're also in NASDAQ. NASDAQ entry is 625.25, 625. So you can see that we're still coiling. So we're just around break even in that NASDAQ trade. In GC, we are into the break even spot as well because we initiated the trade 42.80 last week. And the swings we initiated last week, the NASDAQ, gold, and YM. The S&P is more or less, again, a 1H type of scenario, type of chart. So it could take a little bit longer, depending on the time frame where they start forming, where these setups form. You can expect, you can have an estimate of the duration of the trade. So if a setup is forming on the 5 minute, for example, the duration of the trade could be somewhere between 15 and 20 minutes in a normal market environment. Now, I want to talk a little bit right now as we are into these trades. I want to talk a little bit about the fact that next week we have the quadruple witch option expiration, which is going to be on Friday. It is the last whole trading week. Other than that, we have Christmas, we have holidays, we have the New Year's, and the volume is going to drop significantly. Next week is going to be, again, I would say a difficult week because we are going to get the contract roll next week, whether it's going to be Monday or Tuesday. From what I'm seeing in the market right now, we may get it. And again, I will make a better estimate based on volume, based on what I see on the flow tomorrow. But most likely is happening into that week of the quadruple witching option expiration week. Before it was a week and a day before. So it was today, for example, right? But that was like many, many, many months ago. Like, it has not been happening for a really long time. All right, so what do you know? Surprise, surprise, it is 9:45 and we're getting a little bit of a peek into YM. 660 is the hard stop in the mini S&P. NASDAQ is reacting from those earnings, and there are a whole bunch of tech stocks that are giving it back right now. Apple giving it back. We also Palantir giving it back. Meta pullback. Nvidia pullback. Broadcom, a little bit of a pullback here. Broadcom will report earnings and can't wait. I'm in Broadcom. I'm not going to take anything. I'm not going to take it off the table, even though I'm up. We're seeing AMD down day today. We're seeing a continuation of possibly Netflix. If it takes out 90 is sayonara. We're also seeing a little bit of strength, like in Amazon. Microsoft is trying to hold. We're seeing that even though Google is red on the day, is trying to hold. It's into a very strong intraday base. We have on the Dow side, we have a lot of strength in Goldman Sachs. We have JP Morgan. We have UNH. We have Home Depot very strong. We have McDonald's that is like pending a massive breakout from the swing side. Again, financials are ripping higher. American Express with a brand new high. So again, we have a lot of strength. The CVX, Disney very strong. Tesla still holding the base. Honeywell higher today, and Caterpillar just trying to take out the high. So yesterday, Caterpillar had a brand new high. Today, we're trying to challenge that high. So Dow stocks are very, very strong. They're into a pullback momentum as well. So we'll see. By the way, while I was watching the stock market, we are stopped out from ES at 60. So the trade closed at 60 in ES. So 1 hour down. ES stopped. You know why I laugh so hard sometimes? You know, there are some traders that say, oh my God, that's such a wide stop. Like, really? Really? And you call yourself a trader? Like, no, sorry. The problem is position sizings, and the problem is know where you're getting your information from, because there are many people out there self-taught that are teaching, and they're teaching you wrong. So kind of like, you know, do your due diligence. All right, so Russell is still intact. We're also stocking for YM. Oh my gosh, Doji Man, thank you so much. Guys, just read what Doji Man posted. Thank you, thank you, thank you. Just copy, paste, learn. That piece right there, what Doji Man just posted, is worth thousands. I'm just saying, it's worth thousands what he just posted. Nobody's teaching you that. What he just wrote in there. So copy, paste, analyze it on the text, analyze it on the chart, print it out, stick it in front of you, and make that your Bible, your trading Bible. I'm serious. That's how important it is what he said. So Disney is going to invest $1 billion in OpenAI and strikes a landmark deal to bring beloved characters to Sora. This is just breaking news right now. Yes, Kyle. We should. We should. We should. We should tattoo it, seriously. All right, so we are still into the Russell trade. Want to bring here natural gas, because this is something that we're going to be watching possibly next week. And we're stocking YM, Russell still in play. There is some bad news about Apple. And Apple's Tim Cook urges lawmakers to rethink App Store Accountability Act. What I'm seeing is that a lot of retail stocks are strong. we have quite a pullback in YM. Talk about staircase up, elevator down. No, this is like elevator up and elevator down. Right now, tagging the 10 EMA. All right, very choppy action right now into the market. S&P holding, this is great. For now, the smaller time frame momentum is not that great, so I have to say not that great. We're watching the Dow for a potential trade to the upside. NASDAQ is not holding. This candle in YM, when it's going to close in 3 minutes, could decide the new direction. It's going to be a sweet candle. Parameters that I'm anticipating right now are approximate 310 by 240. So you can kind of like, have an idea to position size. So we're looking at this high low right here. High low. If this is going to be a doji, it's going to be bullish above. And if the momentum is going to continue lower into the S&P, NASDAQ, and even with Russell, if Russell's going to start breaching 55, we could be lower, but a lot of strength into the Dow here. Once again, the parameters that I'm looking for are 310 for an entry and a stop at 240. That's about 70 points. Let's see if those parameters are, this is not an official trade. You didn't see it in the room yet. The candle has not closed yet. It has 2 more minutes into it. The timing is right. 10 o'clock reversal time. And the target is going to be back into the highs around 450. Right now, it looks like our entry is going to be more like 315, not 310. The parameters are going to be out in about 1 minute. Let's see if we keep the 315 right now for the entry and 240 for the stop. Like we want to take it above wherever this candle is going to close, and we want to put the stop below for a complete rotation that could take the price back into the 420 is also going to be a target of 420 to 450, but we're going to just take 450 for now. Let's take this to the 5-minute. $15. It's gonna look right now like 320 for the entry. Actually, 325, calculate for 320, calculate for a 325. And we have our official entry, 325 by 240. And this is also, I'm not gonna add here, but this may be like a good ad. And the ads are as if you're taking a separate trade. FYI, you allocate another R, no big deal. We have the initial entry in RTY at 71. We would add over this rotation here, like we would do 65. We have two indices that have carbon copy setups. So if we add at 65, our entry 71, our average is going to be 68, so just above here. We're not gaining that much. All right, order filled NYM. I don't know if you guys are hearing any noises, but the lawn people are here, so they're making a whole lot of noise. Thanks so much, Dan. I'm not going to be adding to Russell because we won't gain a lot in the average. Our entry is already 71.5. So we're not going to be like doing, it's not going to do us a big favor. This is the support right here. It looks like a sandwich down, but it's support. Joey. Prayers to the trading gods right now. A second put. NASDAQ bouncing. NASDAQ potential double bottom on the 1 hour and short squeeze. Short squeeze potential. Entry 65. That would be 65. And let's see the stop. It'll be 85. Let's do it. This is a short squeeze. It's going to have a smaller target. It's going to be 500 to 520. Natalie, here's the target and entry and all that. I know. Where are you, Nick? Where we need you. All right. We feel lost without you. For sure. Okay, 64 is the high NASDAQ. My order is at 65. So 65 for the full size contract. Let's go, people. Okay, now this brand new 5-minute candle high is currently 63. This is exciting. All right, a lot of compression happening in the Dow here. Everything is pushing. Why? It's 10 o'clock. It's a miracle. It's the 10 o'clock miracle. By the way, order filled in NASDAQ. Don't get too comfortable in NASDAQ because that's a short squeeze that we're doing right now. And we're taking the price into the 10 EMA. That's Target number 1. Target number 2 is going to be the 550 area and then potentially 560-ish. That is very wishful thinking. See, that add into Russell really wouldn't do us a great favor because we have 71 and this is 68. We would have had 68 for the average. We would be like at break even right now. So it doesn't really, if we would have had a more abrupt move down and we would have had like a wider stop into it, then it would have made sense. But it didn't make any sense right now. The pattern was there for the ad. I have to say that. Oh, awesome, Bonnie. Good job. The pattern was there. I mean, okay. Target 1 achieved by the nose. If you want, you could take partial profits, or I'm not doing anything, just so you know, just what I'm doing. But you could take partial profits if you want to 500. You could take it off the table, whatever your game plan is. I'm telling you exactly what I'm doing right now. So I'm doing nothing. That's what I love to do when I'm trading. When I trade, I love to do a whole bunch of nothing. Let the price guide me. Target 2 met. Awesome, James. Awesome. Good job. Hey, squeeze a little bit here, a little bit there. This is how you grow your account. Now bring your stop to break even, everybody. NASDAQ stop to break even. No changes in YM, no changes in Russell. And we're going to start trailing tight NASDAQ from this point on. Ooh, 530, big surprise. Thank you so much, market. Let's see if we see the 550. NASDAQ move stop to 500. Raise stop to 500. Come on, Russell. Russell is above break even. Let's go, team. Make it rain. NASDAQ. Uh, 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 uh. Trail 520. 520. Take it out at 520. Not yet. Not yet out. Still hanging on to 23. Now it's at 30. 27. 28. 23. 26. 23. 26. 28. 20 still holding. It's kind of tight. 26 again. 26. 23. Okay, we're out. Okay, awesome job. Okay. It was kind of tight because it started off as a short squeeze scalp, so we can't have high expectations from it. Thanks, BK. No changes, Ben. No changes yet. No changes in Russell, no changes in the Dow. That bugger, yes, stopped us out. But, baby, we're so back. We're making that freaking R back. Yes, we are. Michael, rocking and rolling 3.2 R's on a day. Guys, you only need 2 R's per week to double your account. We are rocking. Michael, it's amazing. Amazing. Great work. So, Dell, good job, baby. Good job. See you tomorrow. Oh, Dell, thank you. That's too funny. Oh my goodness, it's too funny. Okay, okay. I know we're into resistance here in YM. We are at the 450. In fact, we are a little bit above the 450. Let's take this baby out, the 476, and we're gonna be into active trail in YM. We have a little support at 420, just so you know. A little support at 420. Let's see if we hold that support. Oh, thank you so much, Michael. I appreciate it. No, not yet. I'm just like watching. If look at a 15 minute, the 15 minute is bomb. I don't want to miss the big explosive move. You know what I mean? Like, look at this congestion here. Yeah, no, we're just watching it. And again, guys, fingers crossed, prayers to the trading gods. Okay. If somebody hears us, they will go like, oh my God, that's their trading plan. Like, yep, pretty much. Just kidding. Just a little wiggle here. The next support level is 360. I really don't want to pass on this opportunity. If you want to take some partial profits at 400, or even if it pops again into the 420, you can do that. But I love the 15 minute. No changes in Russell. Holding above the 10 EMA. Notice something else that is super interesting in here, guys. NASDAQ holding as well. NASDAQ holding as well. Potential sandwich in RTY here. So if RTY is going to get over 77, it's going to go back to 80, obviously. And then we're going to see that 85. Rotate. Rotate. We need to take this out. We need to print 40, 45. Look at the incredible strength that NASDAQ is accumulating here. In fact, I'm looking at it and I'm like, is my platform still working? Okay, we have literally 30 seconds to go into the close of these 5-minute candles, except for this one. This is a 2-minute candle because we're watching it like a hawk, because we wanted to see it over 440. Just do it. Just do it, do it, Dowski. Do you guys understand that that potential 15-minute, it's worth doing it because that 15-minute could bring multiple R's. And we love the R's. We love the R's. It printed a 37. You see this dotted line here? Super strong resistance. Not only that, we're getting resistance from here, but we're getting this artificial resistance. This dotted line represents the resistance from the prior session, high, low, close, and open. Okay. All right. All right, we got a 46. Phyllis, oh my God, I love that. Oh my God, I love that. Want an R for Christmas. Oh my God, I love it. I love it. This is the best thing that I've heard. Like, seriously, this is bomb. This is so cool. All right, we're over 50 again. Oh my God, you guys are fire. Oh my God, this is so cool. Rudolph the R-nosed reindeer. Oh my God. Best thing ever. You guys are the best. Oh my God. This is super awesome. Okay. We're back into these peaks. Let's raise the stop to 390. You guys see the pivot here? It's in sync with the 10 EMA. Oh my God, Roland. Oh my God. Roland. Oh my God. Oh my God. This is awesome. Okay, let's YM raise the stop. The smartest people, I swear to God, you guys are the smartest people. Okay, what was that, 390? Okay, let me check it again. Okay, let's do the 390. Raise the stop, NYM to 390. Now, do it on your platform as well. See, sometimes, you just have to wait a little bit. Sometimes even when you wait, it takes you out, but sometimes it's worth it to stay with the game. I mean, it was very possible for the price action to reverse, but in that case, I was looking at the 325 to raise the stop to break even, you know, so we wouldn't have a loss. So that's actually good. Okay, with all this really crazy stuff going on, I even forgot to look at RTY, but RTY here looks good to bring the stop to break even. I mean, it would be in sync with the 10 EMA. So we don't want that. No, I'm not adding to YM. Yeah. Okay, RTY stop at break even. Break even. Stop to break even. Oh, BK, you're rocking. You're rocking. If you're still long, trail it by the 5-minute 10 EMA. So your stop should be 560. That should keep you safe to take it higher. And if it breaks 700, bam. Oh my God, Phyllis. Oh, oh my gosh, this is crazy. Oh my gosh, this is crazy amazing. Oh my God. Oh my God. You guys are fire. Hey Andrew, welcome. This is your first day. Hopefully it's not your last. This is the last day of the open house. Okay, you're trying to see what's going on. So we had a few trades going on since this morning. Our first trade that I called was Russell long at 25.71. Then we had the S&P at 68.71. Russell trade is still ongoing and we have to stop at a break even, so we're protecting it. We don't want to lose on it. So for now, from now on, we have a risk-free trade. So whatever it does, if it decides to pull back, then we're going to have a break-even trade. So we're not going to lose anything, but as long as it's progressing higher, it's going to keep on delivering with zero risk. And then we had the mini S&P that shook us out at 60. It went down like to under 40. That's the only stop out. So 1R loss. Then we had a short squeeze in NASDAQ. We took our money. We made about 55 points and about a 1R into it. So we recovered the 1R that we lost in the S&P. And we are in YM at 325, which is pure bliss, pure profit. We initiated the trade at 325. It has surpassed all our targets right now, and we're in full trail mode. So we're over 250 points in it. Multiple R's. When is the best time for your, you mean the 5-day pass? You could do it anytime. You could do it next week. And in fact, you don't know when the opportunities are there. You're going to learn more when you're having a difficult market environment than when you are trending. So there's no best time in the market. Every day is a massive opportunity in the market, every single day. So it doesn't matter whether it's in January, February, or beginning of January, or whenever it is, or next week, it doesn't matter. Every day you have opportunities in the market. The market is moving every day. You're not going to have full weeks. So for example, if you decide to do your 5-day, let's say on the 22nd, you're going to get access for a couple of weeks or something like that, because we're only trading just a couple of days in December, and the week of the Christmas week and New Year's week. So therefore you're going to get a few more extra days. Yes, Phyllis. Yes, this is like officially Well, here's the thing. Santa Claus rally typically kicks in a week before Christmas, but we're 2 weeks before Christmas. We have the FOMC, so yeah. Okay, let's trail YM 500. Trail YM 500. YM trail 500. It over delivered. Shanti, you become a member of the class or the trading room. We provide you with the platform, risk calculator, the whole shebang. BK, awesome. Josh, woohoo! Awesome. Josh is saying it's official. This trade just put me over my current salary with my full-time job. Joining your team has been the best thing ever I have ever done. Oh my gosh, thank you so much. Thank you, thank you, thank you. Thank you. I so appreciate it. This is the biggest reward. Like, this is the biggest reward for me. Exactly. Exactly, Richard. Awesome. Let's go, baby. We're going to keep on trailing this Dow here. I'm going to send you a cool chart in a few seconds. Oh my gosh, Ben. This is crazy pants. Woohoo! Okay, I promise you the chart. Where is that? Mark. Gosh, thank you so much. Thank you so much. All right. Remember what I said about the Dow here on the 15-minute? I said, just wait a little bit. Just wait a little bit. It's worth it. It's worth it. Sometimes it's worth going for the home run. Sometimes I'm telling you, sometimes we trail it at break even and, and then it reverses or, but once we're up in a trade, we try to manage it in a way where we don't lose on the trade. Oh my gosh. Thanks, Douglas. Are we going to take this baby to 700? Thank you so much, Marcello. It'll make me happier once it trades over 4,300. Much happier. Okay, 500 is still the trail stop, so we're giving ourselves a chance. We're still alive. The low is 516. Bottoming tail. I don't use the 10 EMA specifically for the entry because if I would have used, for example, I have strategies that are based on some moving averages, but it's the price correlation with the setup and the timing around, let's say the 10 EMA. So for example, here we did a short squeeze in NASDAQ. So the price was below the 10 EMA. So this is a totally different strategy. When I trail, I do use the 10 EMA because it guides me. Whatever is above the 10 EMA is like a superpower trend, but it's not like it's tapping the 10 EMA and I'm going to be out. I'm also looking for some kind of price action reaction from it. So it's either a rotation or a base or some kind of price action reaction. Casey, good job. Good job. Of course. So it depends on the strategy. In our course, we teach our traders 10 trading strategies. But the reality is that on a day-to-day basis, we probably use like 3, maybe 2, okay, out of the 10. But you're equipped with all the strategies so you can tackle any kind of market. Because if we're just looking for trending trades, then we would just trade the Dow, for example. But if we saw an opportunity here in NASDAQ, which was a short squeeze, so we applied the short squeeze strategy in here. Okay, trail stop remains the same. We're still holding above the 10 EMA team. Good job. Good job, Ben. Awesome. Yes, we don't do the volume profile. We just do pure price action. Simple Wall Street strategies in here. Old school strategies. that keep on working day after day, month after month, quarter after quarter, year after year. Absolutely, Jay. I will walk you through that once we're out of this trade. We're getting pullbacks. RTY trailed out. Break even. We didn't lose anything. We didn't make anything on it. It's fine. Even though it hit target in here, it hit target, but we're fine. YM guys, trail 510. YM trail 510. Guys, didn't I tell you yesterday that today we're going to have a good day in the market? We know when these days are. We know when we have potential to make money and when we have the potential not to make money. Gosh, I promised you guys a chart. Hold on a second. Just want to show you something really cool. Okay, this is a chart of the Dow. And this is what we have been trading today and yesterday. Dow has officially entered the velocity area. So by compressing here on the 15-minute, that's why I said it's worth taking the chance, okay? Because the bigger picture shows the potential to tackle the all-time high and to break above the all-time high. This is what velocity is. Once a stock, an index, trades above the all-time high, it unleashes velocity. So from this moment on, watch that index or stock very closely because it has a massive possibility of follow through. Does that make sense, team? Okay, so stay in that trade as long as you're trailing. You need to have a trailing system that is going to keep you in the trades, and the charts need to decide for you so you don't have to feel the pressure of saying, oh my God, should I get out now? I'm going to get out now. Like you feel that adrenaline that you don't know what to do. So having a well thought system. Do you guys see me here? Like I'm chilled, I'm relaxed, like I just don't have any pressure. I've raised my stop. I know where my targets are. So I have a plan for my trade. If you don't have a plan for your trade, then it's going to be very hard because emotions will take over. You want trading to be as less emotional as possible. And having a trading plan and a system that you apply to the market eliminates that because you're going to be blaming the market. You're not going to be blaming you. When you're going to be trailing and exiting a trade, it's going to be because the market told you to exit the trade. And that's, oops, sorry about that. And that's pretty much it. The market will decide for you whether you're going to stay in the trade, whether you're going to enter the trade. It's going to show you where you are going to be placing the stop, where the targets are. It's going to show you projections in case, you know, we are going to be trading into all-time highs. Oh, and by the way, guys, next year, which is just a few weeks away, we are going to have the 2026 market forecast. We do this forecast every single year, and every single year we rock it. So in January, I will be sending out the market forecast that we had last year. I think it was January 3rd or 4th or 5th or something like that. That's when we usually do it, when everybody gets back from the holidays. And I am going to do the current forecast for 2026. So you can compare because you're going to be blown away by the technical analysis that we applied. And no, I'm not using a crystal ball. I'm not winging it. It's just pure technical analysis that shows us what the market is likely to do. When is the market likely to react? When is the market likely to follow through? It shows you those inflection points, and we nailed it. Okay, and we nailed it. So I'm going to send that out in January, and then we're going to do the forecast to see how accurate it is. And it's not me. Okay, it's not me. It's what I have learned to do and apply. So this could be you forecasting everything. All right, so 510 right now is our trail stop. We're seeing that the mini S&P is already pulling back. Russell is pulling back. So we're getting a little bit of pullback here. Definitely, if you're looking at the 1 minute, that is a massive range that we have going on here. Typically, when we see these types of ranges, they have the possibility of continuing higher. However, because we really didn't have like a bigger pullback, this could potentially act as a pullback. Oh my gosh, Doji Man, you got it. You got it. Okay, so now we're looking at this support level here to hold. As long as the support level holds, do you guys feel, I don't feel any pressure, right? So I don't feel anything. I'm just watching the charts, looking at the chart, right? And I have my trail stop hard on my platform. So right now I lifted my stop to 510, and I'm literally letting the price take me out. So I'm never taking myself out. I'm never seeing like, okay, 580, I'm gonna take it here, I'm gonna take it here. No. I always use limit orders. Rarely that I buy at market or I sell at market. Okay, now we're trailed out. The market took us out. We didn't have to do a thing. I'm talking to you guys here, so I didn't have to do a thing. Okay, so we closed the trade in YM at 48,510. That's perfect, right? We just made 185 points and a good amount of R's in there. All right, now, okay. Okay, I'm gonna go back because there were some questions. Okay, Jay was asking, the market moves fast and you can think fast. If you have a few minutes, can you please explain the logic behind the trades you called using those 5-minute candles that you have on, win or lose? Okay, so the decision, Jay, is complex, and I explained why we are going to go long or short, or when we see the obviously short, not because shorting was not an option today. So when we started this session, we did the pre-market game plan. I lay out everything in the pre-market game plan. Okay. Now, the reason why I watch the 5-minute charts is because the 5-minute is the appropriate time frame not to get you into the trade too fast, and you don't have to wait as long as the 15-minute. So I have strategies that are based on this 5-minute candle. This is my holy candle, if you wish. It's my power candle. And wherever this candle opens and closes and the high and the low that it creates, I look at the structure of this 5-minute candle in relation to the structure of the higher time frames. So if 1 hour, 4 hour daily charts are bullish or 15-minute charts are bullish, then I am going to be bullish and I'm going to try to take a tighter entry based on the 5-minute. But it's in the context, so I just don't look at the 5-minute candle. I look at the patterns, okay? So I look at the patterns that are forming around that 5-minute. Does that make sense? We have strategies. We have strategies that we teach our traders to get into trades in actually 9:32, at 9:35, and 9:45. So these are 3. I like the 9:35 timing usually because it's within the massive surge of the power hour. It's just when the market is opening. And despite what other retail traders are saying, professional traders prefer to trade the first 30 minutes to 1 hour of the day. That is the professional time. Retail traders have a very hard time identifying patterns because they don't know what patterns to watch. But they are simpler than any kind of pattern. The open is much easier to trade than lunchtime, than the end of the day, because it shows clear momentum, especially at the New York trading session. It shows clear parameter. It shows you clean parameters. Plus, you have the impulse of the algorithmic system that takes over from, it doesn't take over from, but it kicks in along with the London session 1. And I discussed briefly yesterday about the London session. I'm not a fan of the London session. There's a lot of manipulation that goes on into the London session. And by the way, don't think that there is no manipulation here. There's a lot of manipulation, okay? So, for example, what happened in NASDAQ here was a reaction off of earnings. Some stocks that have been earnings that have been out last night. Jay, I already did go through NASDAQ and the M&E S&P trades as we were trading, so you can view the recording when I am going to send it out. So it's going to be today around lunchtime that you're going to receive it. So I'm going to make room for other questions in here. So please type in. We were in these trades. I explained thoroughly these trades, so you can watch the recording. All right. Any other questions, team? Oh, there was one more question here. Oh, I can't find it. Andrew, one of the first I have seen volume profile. How successful are those traders with the volume profile? Do they have a clear track record performance for the last 10 years that they can show you? No, serious. I'm just curious. I doubt it. I doubt it. I doubt that anybody can show you. Okay. All right. We do have that. By the way, it's on our website. Okay. So I am telling you, like, if they don't post it, and if they're just, and I mean, you guys have the right to do your due diligence. Okay. Do your due diligence. Just look for performance. Ask questions. Okay. Because I mean, I'm telling you guys, the worst traders, you guys know that CME is fully electronic, right? You know where all the traders, the majority of traders from the CME are? Like the guys that were just filling the orders on the floors. They have Discords. They're on X. They're on TikTok. That's where we were going to find them. And they give advice to traders. And they call themselves traders. They're the worst traders. Just because you worked at the New York Stock Exchange, or you were a market maker, or you had some kind of a deal going on there, you had some kind of a job, doesn't make you a trader. So be very careful who you follow. Yes, actually, Thinkorswim auto rolls. Careful here. So it will display the new contract. It will display the new contract. But if you have a trade, for example, as we are in YM or in NASDAQ, okay, so we are in these two trades, they're not automatically rolling you to the new contract. So if you have a trade active, you have to roll it yourself or close the current trade and reopen it in the forward contract. New all-time high in the Dow. All right, so we are at the top of the hour. We made money today. I showed you the process. We made money yesterday. I literally do not trade FOMC meetings days. However, I did. I'm not sorry I did. I made money, but I don't really like to trade FOMC meeting. This is a personal preference. It has not always been the case. I have always been trading the FOMC, day trading, swing trading. I have been all over. But lately I'm like, you know what? I deserve a break. So I'm taking a break from FOMC days. But yesterday was an exception because I had an open house. This week was an exceptionally very hard week to trade. We had a lot of divergency. And I usually take a step back from trading in the sense that I like to trade less and I usually reduce my R. But this week I saw the potential, for example, in the Dow, I saw the potential in Russell, I saw some potential in NASDAQ, some potential in ES, and we took some trades. Okay. However, I want you guys to be very careful when you're trading FOMC weeks because they are lower in volume. There is a lot of manipulation going on, a lot of range bound action, and not the good range bound action where you can buy support, sell resistance, or sell resistance and cover at support. It's a difficult market environment. We have received an overwhelming number of emails asking for the open house. Okay, so if you guys are here, then have asked for the open house, this is for you. We only do it once a year, and that is in August, in the middle of the summer, just to show traders that summertime is a perfect time to trade because algorithms and, definitely automatic trading, high frequency trading computers do not take vacation. So there's still volume, and as long as the markets are open, money is still to be made. So with that being said, I want to thank everybody in here for being at the open house, and we will continue to deliver really great let's say, service, and we will continue to serve our clients really, really well. But I want to take you very quickly to something that I have been asked to do. And this is, let me just get it in here. Okay, here we go. All right, because a lot of you guys in here have asked, okay, how can we get started with the system that you have, which is a really simple system. If you look back, it's not complicated. Okay. All right, here we go. All right, so I'm gonna let you guys in a little bit on what we do here and how we can help you. Okay, so we have a course. 90% of the members in the trading room are students of Trade Out Loud. They're phenomenal traders, phenomenal traders. So what this course is doing is taking you from student to pro trader. So it's a 90-day process. I'm going to show you why the 90 days is so important. It's a 90-day process, and this is the Power Income Futures Master Class. The next class starts on January 5th, and you will receive, this is an on-demand class. We will have some live classes throughout the year in 2026, but this is an on-demand one. Every week, you will receive 5 emails at noon, okay? Whether you have a full-time job or whether you're, staying at home or retired or whatever your, thing is, you're going to receive this email at noon. This will have an on-demand class, and this is going to happen for the next 3 weeks. The on-demand class is about an hour to an hour and a half, maybe an hour and 45 minutes, or sometimes even 2 hours. And it will take you from very simple concepts to sophisticated concepts that you can apply into the market. And even the sophisticated concepts will seem very simple because of the lingo and the way I explain it. So you're basically going to be receiving 15 emails, okay, with 15 classes. You're also going to get 2 live implementation sessions. And this is where we meet live, so you can implement everything that you learned in those 15 classes. And we're going to do this together. And at these implementation sessions, we're going to teach you how to trace institutional levels so you can trade like I traded today. So it's going to be super simple, okay? You're going to go like, why did I have to learn, okay, those, let's say, 15 classes, let's say over 25 hours in total just to get here. So everything is going to be compressed in these 2 live implementation sessions where we teach you exactly how to implement it into the market. Plus, for January, you're going to get an extra bonus if you're very new to trading, and if you need help with setting up the charts, if you need help with placing orders, if you need help understanding the spread, understanding level 2, understanding a lot of things about the platform and about the putting on a trade process, limit orders, market orders, stops, and how that works. This class is for you, and this is a bonus. And you're also going to have access to the live trading room for 3 months. So what you have witnessed right now for 3 days, it's gonna go on for 3 months. So you're gonna be here with me for 3 months. So you're gonna be 90 days immersed into the futures market. Now, surprise. The system that we teach is applicable to the stock market as well. So if you want to take the same system and apply it to the stock market, please do so. We talk a lot about stocks in the futures trading room. Today was an example because there is a very strong correlation between the stock market and the futures market, especially at the New York trading session and especially at the New York trading session open. I have been on the institutional side for many, many years. I came to the retail side. I dove into day trading, which was completely new for me. I was on the investing side and then swing side, and then I jumped into the day trading side because I saw the potential and because I wanted to generate an income trading from home. And now I literally trade less than my commute time to go to work and back. It took me like over 3 hours to commute back and forth every single day. So I was losing 3 hours every single day. Plus I was working really long hours, and then I'm like, hey, I don't even have time for myself. So I decided to immerse myself into day trading, and I started my career 25 years ago in day trading. So I have 25 years of day trading activity as a professional trader. What does that mean? Trading from home. That's what it means. Trading from home. And I have been trading from home for 25 years. My only regret that I didn't start sooner. Don't be me. Okay. Don't be me. I love everything that I do. I was very fortunate to have phenomenal mentors. And I talk about my mentors and what I teach, and in the trading room, what I've learned from different mentors here and there, and I put everything together in this course to help you. I have many, many years of coaching, and I still receive some coachings here and there, about 6 coaching sessions throughout the year. And I still have a mentor. He's an institutional guy. He's works with Goldman Sachs. So I learned a lot from him, and he helped me kind of like have a little peekaboo into institutional trading. Okay, so this is the reason why I'm able to read follow through. I'm able to read the chart that I'm reading, the momentum, and so on and so forth. And I'm walking you through every single day, because the trading room is a continuation. It's continuing education. Okay, it's continuing education from the course. I literally, when I first started, I have 10 years of mentoring and coaching, and I was trading with my mentor. 10 years before I literally said, it was very hard to cut the cord, because I was like so glued, okay, for confirmation. Then I'm like, okay, I'm on my own, but it works. Okay, so it is old school Wall Street system. And this is a professional trading program. It is voted best in the industry, not by me, by FinTech. We won the FinTech award for best financial literacy tool and services and education and performance. Okay. Absolutely. So the courses, you do retakes, and everybody that is into these live implementation sessions and enrolled in the class, you get live retakes forever. So you're not ever going to be left alone. We're going to be here at one big family, beautiful family. So you're going to get lifetime access to the Power Income Futures Trading course. I know that the majority of trainers, coaches out there, teachers out there only give you limited access. I don't believe that, because trading is not something that you learn today and implement it tomorrow. It's a process, because every single day you're going to have aha moments. And I promise you, even 5 years from now, you're still going to have big aha moments. More so, you're going to receive the e-manual, which is over 600 pages. And yes, you're going to receive all the recordings. They're yours forever. Nobody's going to take them away from you. We're not going to cut access to the recordings, because you need repetition. We highly encourage traders to select a chapter and start learning that chapter for 2 to 3 weeks until you finally get it. And again, you get live coaching sessions, you get 3 months access, you get the live, you get a platform layout, you get student personal support. So if you have any questions within this process, you email us. Either myself or my team is going to answer your questions. If it's trading related, you got me. So we can hop on a phone, on Zoom, or whatever it is, and we can discuss. Or you can ask your questions every single day in the trading room, because we're going to be there for 90 days, and you have the option to rejoin the trading room as well. You're also going to get access to an enhanced risk, position size, and auto R calculator, because we know that 2 hours per week with 2 hours per week, you could double your account. I'm not happy with doubling your account. I want to triple it, quadruple it, and even more. Okay, so that is where I stand with you guys. I want you guys to be extremely successful. We have extremely successful traders in the trading room that put in a lot of effort to learn, because you need to learn how it's done. And they do it on their own as well. But they're in the trading room because we're better as a team. So you're going to get this super awesome enhanced risk, position size, and auto R calculator. So you don't have to do anything. Okay. Oh my gosh. Thank you so much. Oh, Phyllis and Doji, man, love you, love you, love you. The total value of the course, if you break down everything, is over $36,000. And I like to call this, and I'm not the only one that is calling this, the only place where you can learn how to trade like a pro and earn while trading with us. So once you have your course down, you're joining the room and you're taking the trades. Now, these trades are going to cover the cost of your course super fast, because the course is $59.99. And more so, you could actually, we have a installment plan for you if you want it. If you don't want to pay the whole $5,999, which basically is around $16 a day for 1 year. $16 a day. Now, how many times you go shopping and you spend more than $16 on something that you really don't need? Think Costco, even grocery store, Target, Walmart, whatever. Okay. Best Buy, Amazon. Let's not even open that box. Okay. Amazon, Starbucks. And again, you're not going to get rich by cutting your latte. You're not going to get rich if you stop watching Netflix. You're going to get rich if you learn the process to make more money. And this is our goal, to make more money. So if you decide to go on the installment route, I'm going to show you in a second where you're going to get that. Thanks so much, Sol. Oh my gosh. I'm blushing. Okay, so that's about 300. There are different plans. They're cheaper than that. They're less than that, than $323.19 a month. This is the most popular one, the $323.19 a month. And think about it. How many times do we spend so much Amazon, whatever it is, Costco, you go there for milk and you find yourself that you have a cart full of junk cookies and stuff, right? Okay, so basically this is exactly what I'm talking about. And now I'm going to show you where you can go to get that. Okay, oops, let's see. Okay, here we go. Oop. Sorry about that. I don't know what happened. Okay, let's do it again. Okay. Okay. So this is the Power Income Futures 90-day masterclass. And again, I told you that it's a 90-day class, and that's for a reason, because this is based on the most powerful 90-day rule. If you don't know what it's about, you could search, Google it. Okay. So our course is designed to help you develop trading habits that stick, right? Because repetition is key. How many times have I repeated in here about the R, about the importance of having a hard stop, the importance of trailing, the importance of this, the importance of what to watch, the importance of how to begin your day, right? So you notice that we have a plan, we have a system. So when we start the day, we look at certain things before we jump into the charts. And when we jump into the charts, we jump into a specific type of, let's say top down analysis look for charts. So in just 21 days, right? Remember, the course is 15 days. So we send out 15 emails out with 15 classes. But basically, the last email that you're going to receive has about 5 extra classes, 5 or 6 extra classes in it, because this whole bunch of boom, 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 a whole lot of links that you're going to be getting. So it's exactly 21 days of massive trading education. And this is how you're going to build that solid routine. in the trading room, because you're going to see me what I do every single day. So you're going to carbon copy every single day what I do. I did that with my mentor. Okay. So if you want to get started, oh, let me just put the link in here for you guys. Okay. Boom. Okay. So if you want to get started, you could just click the link, read everything that we have here. I'm going to show you the performance tracker as well. In fact, you know what? I showed it to you yesterday. I don't need to show it again. It's on our website. You go under services, you scroll all the way down to view the performance tracker and click on that. We have 10 years of performance in there. So you can pay with Venmo, Apple Pay, any credit card, debit card, PayPal, or PayPal later. This is for installments. And you could actually click here. So at checkout, when you select the checkout, select pay later if you want to go on the installment route. And the benefits is that you split the cost into smaller payments instead of the $59.99 payment. And you can get installments as low as $323.19 when you click on that link. So again, this is to provide you with no excuses, no procrastination, no maybe later. Okay, maybe I'm going to start this next year. Maybe I'm going to start this here and there. This is your moment. So if you want to take action and step into action, this is it. And we have this trading lab that is going to be new to the course. And not only that, but we will provide you access if you join by January 10th, by January 5th, I'm sorry, where we'll create you action to other 4 specialty classes with pyramid trading, that is going to put you over the top using intelligent stops. So there are going to be other classes that are going to be included. Now, these classes are going to add up after January 5th. So they're not going to be free for everybody that joins after. It's not going to be free. So they have a $2,500 value. So you're going to pay more to have access to those, but you're going to have access to them at the end of January. Okay. If you enroll on January 5th, we are going to make that available at the end of January for you guys, because first you need to learn the course, and then those are the frothy foam, the hedge fund style type of things. Okay, so you can read here more about what the class teaches you, and the program starts on January 5th. Again, 15 on-demand classes, 2 day live implementation mentoring Q&A session each month. Okay, did I say that each month? Okay. And you could come each month. So it's not that, oh my gosh, I'm going to come to the implementation session now and like, oh my God, what if I don't get it? The market environment changes. What am I going to do? I'm left alone. You're never alone. Okay. And this is aside from the trading room, right? So you're with us forever. I mean, this is the kind of commitment that I'm able to offer our traders. Plus you get that 1-day trading incubator, the trading lab. You get a market application because you're going to be in the trading room every day, just like we were today. And you can add the on-demand futures swing trading course if you want. This is a $4,997 value for $1,997. If you go to our website, TradeOutLoud.com, and go under education, you can see that the swing trading course is separate from the day trading course, and you could access it now for this instead of this. Okay. So the swing trading course is going to be sent to you after you have completed the day trading course. Okay. Because you need to understand some concepts from day trading in order to step into the swing trading. Okay. So if you want the course, the swing trading course, that is here. And again, you can apply the same system at the checkout with the pay later. All right. And what we teach. All right. Boom, boom, boom. Here's everything you'll learn. First of all, you're going to get like a day 0 intro to the course. Then you start with day 1, and this is going to be intro to futures. Okay. And here we talk so much about futures, things that you think you knew, but you really don't know. Okay, so it's the simple stuff that, you know, you think, oh my gosh, I know this, but here we talk about algorithmic trading as well. We talk about window dressing. We talk about option expiration. So there are things that, oh my God, do I really need to know about these things? And yes, you do, because this is your trading career. So this course alone, this is worth more than $2,500, like alone, intro to futures. Then we talk about candlesticks. Today we had several questions in the trading room about the 5-minute candle. Okay, it's not that simple trading the 5-minute candle, because if there was, I would just release it into the wild and say, hey, here's the strategy. This is the 5-minute, and just trade it. But it's about the structure as well. And this is where we teach in here how to watch price action, okay, and how to watch and how to basically decipher the psychology of the buyers and the sellers based on the candlestick size, based on the color, based on the format, based on everything else that is around it, location, timing, etc. So this is super interesting in here. This is a different type of view into candlesticks. Then we talk about market cycles. When is it a good time to buy? When is it a good time to short? Because in day one, I received a question. It's like, why don't you short this? It's like, because there's no pattern to short it, and plus it's not in the appropriate cycle to start shorting. Okay, so the market proved that it went higher, right, since then. And then we have the market trends, how to read the trend, uptrend, downtrend, sideways trend. But wait, there's more. Does anybody teach you how to identify an early change of trend, to have that confirmation and say, bam, I have the change in the trend. It's right in my pocket right now. I know that the market is going to change trends here because of this, this, and that. And this is it. So I'm telling you guys, this is so valuable. This right here, how to learn to identify and the early market trend is insane. Then we talk about trading timeframes. There are executional timeframes, analytical timeframes, and the fusion. How do I implement, for example, what I read on the daily to what I see on the 1 minute, and the fusion between the two? When do we have velocity? When do we have because see, on Monday and Tuesday, I put a lot of focus, and if you rewind and if you review session 1 and session 2, I talked a lot about inside days, okay? And this is where you're getting that information from the daily, okay? Because you have a lot of daily information about the inside day that was correlated to the smaller time frames, and they were preventing the smaller time frames from advancement. And then we have the anatomy of the trade. We're going to show you exactly how to calculate entries with laser sharp precision, because when I get into when I get into a trade, I'm not winging it. I know exactly where my price is. I know exactly where my stop is. I know exactly where my targets are. So you leave nothing to chance. Everything is plotted out. And when you have a clear system that shows you the precise entry, the precise stop, it becomes so clear. And then you have confidence in the market, and then you just apply it. So we're going to teach you how to calculate targets based on multiple time frames, based on the time frame that you're trading, how to calculate the risk. But for risk, we have a whole new chapter. We're also going to teach you the market tempo. This is proprietary to the trading room, and these are reactionary times, and these two are proprietary along with the trigger times. These are timings of the market, because if you have been trading for a while, you probably have noticed that there are some instances when you got a perfect trigger and the trade failed. Now, how many times has that happened to you? How many times has that happened to you? Right? How many times? Yeah, Dan, exactly. You got the perfect entry, and then all of a sudden the trade stopped. And you go like, what the heck happened? That's because it wasn't the proper timing for the market. And you hear sometimes Jim Cramer say about the timing in the market, he knows something, right? Because if you have been in the institutional world, if you have been in the hedge fund world, they know that there are certain timings in the market. There are timings when the volume comes in. There are timings when the volume dies out. There are timings when the triggers happen, okay? So here you're going to learn when those triggers are happening, because today I did mention some. If you pay very close attention, then you got it. We're also going to teach you 10 trading strategies. Again, 10 trading strategies so you're equipped for any kind of market. Today we had two bizarre trades, right? We had a divergent market. NASDAQ was weaker because of the earnings of some stock that reported last night, specifically Oracle. And we had relative strength into the Dow and certainly into Russell as well. So because we have such a divergent market, we took a trend trade, which was the Dow long, but we took a short squeeze NASDAQ long as well. So there were two different strategies. So we teach you many more trading strategies in here. We teach you technical analysis and how to apply technical analysis, super simple. And we teach you stuff that a lot of information is not out there. You're not going to get it in any books. It's just based on experience and how to use these to your advantage. This is a complete class. It's a 2-day class. This one, the technical analysis, and it teaches you everything you need to know from A to Z about technical analysis. In fact, with this course, you don't need another webinar. You don't need another course. You don't need another book. You don't need another DVD. You don't need anything online. You don't need anything. This is it. Okay, it provides you with everything you need. It's in here. It's everything centralized. And this technical analysis chapter is so important because this is the core of everything. This one and with candlesticks. And then we teach you money management. Money management is more important than your strategy. It's more important than anything else, because if you know how to manage your money, and yesterday we had a lecture about the R, and we had a lecture about position sizing, okay? And we teach you exactly that in here, but how to do it. And we also teach you how to double, triple, or quadruple your account each year. So I don't think there's anybody on the planet that can teach you this, and nobody teaches you that. We are pioneers in this. And also, we are teaching you trading psychology. You have a full chapter in here. We teach you how to journal your trades. This is so important because this is your, you could become your own personal trading coach, okay? Your own personal trading coach. This is where you're going to be able to determine your mistakes, the trades that do not work for you. You're able to analyze everything that you have been doing. And we provide you with the trading journal as well, with the copy of a trading journal. So you can apply. You don't have to invent it. You don't have to do it. You don't have to do it alone or invent an Excel sheet, even though you can. But we're providing you with that as well. We're also partnered with a tracking software that I personally use that is going to be in here as well. If you want to apply that, I do recommend that in the first 3 months you do not. So you just take it, you know, because it's a lot to take in. Okay. And then guess what? You're going to be getting two things here that are out of this world. Nobody on the planet is going to offer you this. First of all, it's a trading action plan. This is going to be a step-by-step for day trading. It's literally minute by minute. So it's going to take you at 8:30 what you need to do, at 8:45 what you need to do, at 9 o'clock what you need to do, at 9:15 what you need to do, at 9:30 the market opens, what you need to do and what you need to watch, at 9:15, at 9:45, I'm sorry, at 9:45, at 10 o'clock, at 10:15, at 10:30. So it's going to walk you through what charts you need to watch. So it's going to give you like this whole manual, this whole game plan is in here. It's basically in 3 slides. Nobody has ever done this. I have it for you guys. It's insane. I've been teaching this for 10 years and traders just love it. Traders just print it out and put it in front of them, you know, after they complete the course. And then what is every educator out there telling you that you need to have and you don't have? A trading plan. And I have to agree. When I first started and when I dove into day trading, everything was so new to me, as if I have never traded a day in my life. And literally my hand was shaking on the first trade that I took. And I took the first trade of probably 10 shares of something. Okay. And it's intimidating when you're day trading, when you're coming from the investing side, and when you put an order and you don't look at it for 3 months, it's one thing. And then when you have something that is moving with super fast, it's a different thing. And everybody tells you to have a trading plan. And I'm like, but I have a trading. I mean, I have trading experience. I have market experience. I don't need a trading plan. I have it all in my head. Completely wrong. You need to have a trading plan. And guess what? I'm providing you my trading plan. So how much money would you pay for a trading plan, literally, that is going to take your trading to the next level? And it's done. It's done for you. And if you want to tweak it to your liking, you could do that. But it's yours to start, okay? Because everybody out there tells you that you need a trading plan, yet nobody provides you a trading plan. What's their excuse? I'm just curious. Can you guys tell me when you ask different traders to provide you their trading plan, what they say? What they say about the trading plan is that it's personal and that you need to create it yourself. But if you have a trading plan that you're sure of and it's very successful and it delivers results, and it delivers verifiable results, don't you want to share it with people? And I share it with my traders, okay? And then here, this is the power of the levels. These are the institutional levels. Yeah, they say, well, exactly. That's what they say. Okay, and this is the power of institutional levels. This is where we put everything together. And this is what we do in the implementation class. We're tracing institutional trading levels, levels that Goldman Sachs trades, Citadel trades, hedge funds trades, everything. Okay, the whole thing. Okay, or they give you a trading plan that doesn't work. Exactly. It's not verifiable because they don't have a track record. Okay, or you find one online, but is it verifiable? It's not. Okay. So, all right, so putting everything together, this is another thing that we do, and we teach you how to unlock the secrets to trading. We also offer you a 10-point checklist, like what to do and what to look for before you place a trade. We give you recommended websites because you're gonna want to have some bookmarks, and you want to make sure that you follow some news, you want to follow some earnings, you want to follow, some grain reports if you're trading corn, etc. So these are some super helpful websites. We're also going to give you the platform layout. So if you're trading on Thinkorswim, you're going to receive the link for this platform. Other than that, it's really not going to help you because you're also going to get a whole bunch of stocks, and you're gonna go like, oh my gosh, why should I watch like Meta and Cisco and UNH? Like, you're automatically going to delete them. But you're going to find the reason why, and we explain it here in the course, why you need to have those charts as well. And we're going to teach you how to read the charts. Okay, this is so important. You're going to become a chartist. Okay. All right, so if you're ready to dive in, again, it's $59.99. And by the way, next year, the prices are going to go up. Like, seriously, the prices are going to go up. We have had these prices for the last, I don't know, probably almost like 5, 6, 7 years. And they have not gone up with all the inflation and everything else, okay? And we do pay a lot because we use Zoom. We use a lot of software to bring you the professionalism that we bring to these classes. I mean, I don't think we need to go through reviews. You guys had some really live reviews in here. Okay, so literally this is a little redundant right now. But if you're ready to start trading like a pro and make 2026 literally the start of something phenomenal for you, okay, this is it. This is it. You have, brand new year, brand new you, brand new wealth. Okay, so if you're ready, once again, this is the link. I'm gonna copy and paste it right here. Bam. If you're ready, just dive in. Our team, once you sign up for the course, you're automatically going to be included in the trading room, even though the course starts January 5th. Your official access to the room is going to start January 5th. However, your unofficial access is going to start tomorrow. If you signed up today, it's going to start tomorrow. So you're going to have 3 more weeks in which you can get used to, what we do in the trading room, and kind of like speed up the process a little bit, because you already know what to expect. And you already know what to expect here because we had the open house. So if you're ready to jump in, to dive in, to become an astute trader, because winging doesn't cut it for trading. You really have to know what you do. Okay, so you have the full payment option, or we have pay later with provided by PayPal. And you can pay with Apple Pay, whatever, any credit card. So again, if you want to opt through installments, we have a lot of traders that are opting through installments. So dive that route. So this is it, guys, for today. Thank you so much for joining. Sorry, my camera didn't work today. And thanks so much, BK. I so appreciate it. Thank you, thank you, thank you. Thanks, everybody. Thank you for participating and taking time from your busy schedules to spend it here with me. I hope it was worthwhile. We made money. I provided a lot of trading education within these 3 days and a lot of truth bombs and knowledge bombs. So I hope that I'm going to see you guys very soon in the course. Thanks so much. Yes, you could. And again, I'm going to put my email in here. It's info@TradeOutLoud.com. If you have any questions, feel free to reach out. Thanks so much, Lori. Okay, so reach out, guys. If it's a technical trading question, I will answer it personally. If not, if it's in regards to signing up, again, my team is going to take care of it. So thanks so much, everybody. Happy holidays. I hope you guys are going to have, because this is the last time probably that we're going to do an event. No, it's not. No, happy holidays yet. Okay, we're going to see you guys very soon. Probably next week. I think I'm going to meet you guys. Yeah, next week. We're going to meet next week. And I think we're on the 23rd. Okay, so thanks so much, everybody. Not on the 22nd, Lori, because we have plans. Okay, so thanks so much, everybody. Have a great rest of the day. Okay, hope you guys had fun and you had my perspective into trading. So thanks so much, team. Okay, and the rest of you guys, see you tomorrow in the trading room. Bye, everybody.